Have you wondered what financial advisors actually think about finances? This is your sneak peek at the conversations within Financial Design Studio. Michelle Smallenberger, the CEO here, will be your host as you go behind the designs.
This is Behind the Designs, a podcast where we want to share with you how financial advisors think about money so that you can make well-informed decisions. My name is Michelle, and I'll be your host. One of the most important elements of your finances is ensuring you are protected from risk. So to answer these questions, we're bringing Ryan Delp back to the mic. Welcome, Ryan.
Good to be here again.
Yeah. Ryan is a senior insurance agent at Bradish Associates. And I think it was about this time last year that we talked last. So thanks for joining us again. And this is always great to just kind of hear like what's new.
Right.
So I guess we'll just kind of start with that because that's where we always start by asking you, what are you seeing? And
it's kind of more of the same of what we talked about last year. I think last year we talked about rates going up and inflation being a big factor in that. And the answer is that is still the case. And not to be the complete bearer of bad news, but it's a little bit worse than it was a year ago. If there's something changing, it's probably that rates are increasing even more so than what we saw a year ago. Lots of factors for that, but certainly that's the big thing that we're seeing is rates are going up at a level that I certainly have never seen in my career.
Yeah. And when you talk about rates, you're mainly talking about people's like premiums, insurance premiums that they're paying for like home, auto, different various types of insurance.
Correct. Yeah. So what you're paying every year for your home or for your auto, those rates are increasing dramatically. You know, a few years ago, if someone's rate went up 10%, it was like, oh boy, let's see what we can do. Now, average, we're seeing probably 20 to 40% increases. And that's actually for people who have not had claims. So it's just sort of the place that we're at right now in the insurance industry.
Yeah. Okay. No, that's helpful. And I'm sure this is kind of another one of the things on the list where people are seeing just increasing prices of things in their life. Mm-hmm. So our goal today is we're going to talk through really kind of like a miscellaneous list of things like this, things you can do, things you shouldn't do. We're going to cover kind of a wide variety. So I think this is going to be really helpful for people to listen into. Let's just dig into, I guess, here in the beginning, since we're talking about increasing prices. And really, that's kind of one of the biggest changes is increasing prices that people are seeing. That's not necessarily, like you said, what people want to hear. That's not exciting. But let's talk about maybe why some of these are going up. So we'll kind of talk about some of these individual policies, home, auto insurance. Do you just want to talk about each of those kind of a little bit, why we might be seeing increases in rates for any of those like specifically?
Yeah. So the rates that you're paying now are based off of the claims that have been paid over the last couple of years. One of the big things post-COVID, obviously, was inflation. So it was the cost of materials, the cost of labor, the cost of vehicles going up. All of those things happened sort of post-COVID, and that had a big impact on claims. And so to recover from that, the insurance companies increased rates, last year to sort of help with that and realize that even what they increased last year was not enough. And so we need to increase it even more now. So a few different things with that. So obviously, like I said, inflation is one part of that. There certainly has been an increase in, this is more for the homeowner side, storm activity. We're just seeing more storms, more frequency of that, more severity of that. I did a little digging on that, and even like this past year, the amount they've paid out for storms is 87% higher than the 10-year average. So if you look back 10 years of what the average was, we're almost 100% higher than that. And even the first half of this year in the U.S., there's been, I think, it's 12 different storms that have paid out over $1 billion in claims. Typically in the past, you'd think, oh, well, if there's a hurricane, that'll pay out $1 billion. Okay, that makes, or the wildfires in California. Now it's like, no, the hail stuff or the frozen, there was a claim a year ago or two of just, it got super, super, super cold right around Christmas. And so we had frozen pipes. And that was, one company said that was the biggest claim that they've had in their history. That's not a hurricane. That's a it's just cold. So we've seen a lot of storm activity. So that's really been a problem. So that not only the frequency, but the severity of that. Combined in with that is we're seeing, so paying out claims of that sense. We've also seen more people kind of filing claims that may or may not actually be claims. And so I know we sort of talked about this a little bit with people coming and knocking at your door, right? And saying, hey, I think you have hail damage. And so people are saying, oh, well, I have an old roof. I can sort of hit the lottery here and get a new roof of just submitting a claim. And so you're seeing more of that. We're in an ever more litigious society, so people are suing more, and I think there's also something called social inflation, which is basically where past someone sues somebody and the jury says, okay, well, they asked for $1 million, so they were awarded $1 million. Now what we're seeing is juries are doing more of like, well, we're going to pay the $1 million, but then we're going to sort of prove a point, and we're going to award them another $5 or $10 or $20 million, like a punitive damage, and so insurance companies are not paying the $1 million, they're paying $21 million. And so it's just sort of this perfect storm of a lot of different things happening, which all ends up being you paying through the premiums. So that's kind of the long answer to that question.
Wow. Yeah. I guess just a couple other types of insurances, life insurance, health insurance, anything specific for those kind of reasons for why those premiums are increasing?
Yeah, well, life insurance actually, I think, has stabilized pretty well. Again, COVID really disrupted that. It decreased the average lifespan just because a lot of people were passing away, unfortunately. So it looks like that pricing has stabilized a little bit. Health insurance is tough because the cost of medication and hospitalization and all that it's going up and up. And frankly, at least here in Illinois, there's a lack of competition. Blue Cross is sort of the only show in town. You see some of UHC, but a lot of companies have left Illinois. A number of carriers that used to be here are not here anymore. And so you have one big company who can sort of do what they want. UHC, again, is here, but we have not seen their pricing be terribly competitive. So that's a combination, too, on the health insurance side, where the cost is legitimately going up. But there's not a lot of competition to kind of keep things at a certain level. Yeah,
it's interesting. They've each kind of gone through like their own period of correcting or increasing.
Yeah.
It's I guess like you're probably, does this sound more normal where, each year people are renewing their policies and there might be like, kind of an expected increase each year, maybe 1-2% is normal. But a lot of these things we're seeing are kind of making big adjustments all at once. And hopefully we'll go back to kind of those more minor adjustments. But is that what you are used to experiencing? But now you've seen like in all these different types of policies, these big jumps?
Yeah. And certainly I think one thing to sort of hang your hat on in the future is that insurance is pretty cyclical. A few years ago, workers' comp was just brutal. And I think with the fall of 2008, with everything, workers' compensation insurance was nobody wanted it. It was really high. It was really hard to get. And then over the course of some time, the companies started to be more profitable in that. And today, it is easily the most competitive product on the market. Everybody wants workers' comp. Everybody loves workers' comp. You can shop it and get really good savings on workers' comp. But 5-10 years ago, that was not the case at all. Nobody wanted workers' comp. So I think we'll start to see that here down the road with the other insurance. It's a cyclical thing. Some may take longer to become more competitive than others. I can't say it's going to be a uniform thing. And I know I've had people say, well, the interest rates are dropping right now, so my insurance should be dropping right now. Well, no, again, it doesn't work that way. It's going to take a little bit of time down the road for that to actually work out. But yeah, the industry is cyclical. So I certainly think that we'll get to a point where sanity reigns again. It just may take some time.
Yeah, I think that's actually helpful here in the beginning to like give people hope that, maybe we're seeing
just turn it off after this, right? Yeah,
exactly. So like there is hope. We may see big adjustments, now, but even at the end, as we've talked about, like there's hope again. So this is a good way actually to start and finish this episode, and maybe painful in between, but but this is going to be good because I know we're really going to dig into a lot of these specific things, because I think when everything costs more, there is this tendency of people to think, okay, well, what am I already paying for? I mean, this is natural when people look at their expenses. These are the things that we're saying, well, what do you already spend money on that you don't need to, but you're paying for? But these are some of these things where, oh, I have insurance. Well, maybe I should use that to cover this expense instead of paying out of pocket. So we're going to talk about some of these things because I think that's kind of the temptation that people have. One of the questions kind of in here is just kind of a separate, you had kind of highlighted this because we asked you, what are some specific things you want to be sure, and mention that you're kind of seeing frequently. Why don't you kind of touch on kind of this separate deductibles, kind of this home and auto or like home policies that you're seeing for like wind and hail, deductibles. Why don't you talk a little bit on that to kind of explain some there?
Yeah, and it's what we're talking about is your homeowner's insurance really here. So forever with homeowner's insurance, you would generally have just one deductible. And for a while it was, $250 or $500. You don't see a lot of those anymore. And what companies are doing, and again, the biggest problem I would say with property right now, and specifically talking about homeowner insurance, are roof claims. And we kind of already talked about that a little bit with the storms that are coming through, the people that are knocking on your door, and this idea of your homeowner's insurance is a warranty. And I have an old roof, I'm going to pay $500 and I'm going to get, $20,000 for a new roof. That sounds good to me. Who wouldn't want that, right? But insurance companies, this is not a popular thing, but they're not a not-for-profit. They are a for-profit organization. They all are. They're in it to make money and to be profitable. So they're changing things to sort of address these kinds of issues. And one of the big things that they're doing is they are breaking out your deductible and having a wind-hail deductible. And that figure generally is higher than whatever your current deductible is. So if you have $1,000 deductible, your policy may renew at a $2,500 wind-hail deductible. Or the other thing that carriers are doing is actually making it the deductible a percentage of what your dwelling amount is. So it's usually 1% or 2%, maybe a 0.5%, but I see more 1% and 2%. So for example, if you have $1 million house, just for simple math, your deductible is now going to be $10,000 or $20,000 for a wind-hail deductible. And the idea there is that if you try and submit a wind-hail claim, like a lot of people are doing, say, okay, well, that's fine, but you're going to pay the first 10 or 20 grand. And that might sort of discourage people from doing it, or that might be what it costs to actually replace the roof. So it's essentially a way to sort of have them self-insure. But that's what we're seeing more of, kind of battle those hail claims, is to have a wind-hail deductible be separate. And it's can be significantly higher than what your normal deductible is.
Okay, so that's really helpful just to kind of even understand. One of the things I think is we just think, okay, our premiums are going to be higher, or we're going to have to pay more if we do file a claim kind of for that deductible. Is that kind of the worst thing that insurance companies can do? Like, we're just going to pay more for these risks?
No, they can also do what's called non-renewing your insurance. And so what I see a lot is people calling and saying, hey, why are my rates going up? I didn't have any claims. And this is the not fun part that you mentioned before. The reason that your rate went up only what it did is because you didn't have any claims. A good example, I have some claims, or I have some clients who have had 50, 60% increases and no claims. And side note, we shopped those and couldn't find anything better. But those that have had claims, I just had one recently, and it was an 86% increase. So, and another one that was 125% increase. So you're seeing that, but as far as the worst thing that can happen is it would be a non-renewal, and that's basically where the company says, look, the either the amount of claims you've had or the size of the claim that you had is not one that we want to, we can't continue this relationship. So they give 60 days notice. So you have 2 months basically to try and find something else. But the problem is, again, companies are tightening down on what they're willing to do for new business, right? And so if they're looking at this and saying, all right, I'm looking at a homeowner, policy with 2 claims on it, or it has a $50,000 claim, not interested, then we'd have to go to what's called the non-standard market. And those prices will be double or easily more than double than what you're paying now. And the claims typically stay on for 3 to 5 years. And so you sort of have to ride that out. So I'd say the worst thing that could happen would be that you get non-renewed. And then you're really going to have to it's going to be hard to find something. And if you do find something, it's going to be extremely expensive. You would have been happy for that 20% increase at the time. So so that'd be the worst thing probably, that you get non-renewed.
Okay. So better that you at least get to make the choice of, do I stay with this insurance company or do I switch, and
Right.
just shopping for premiums rather than not getting renewed and not having that choice. Now you don't have the
Right.
choice. So now you just need to find something.
Correct. Yeah. And sometimes we can say, hey, well, they've been with you for a long time, blah, blah, blah. But at this point, again, the companies, I don't care which company you're talking about. I hate to say it, but it doesn't really matter how long you've been with them. I wish that was something that was a factor that was taken into account, but it just isn't. The companies are losing money, and so they're trying to do what they can, and that sometimes involves non-renewing accounts.
Yeah. And I think it does. There's just times where it comes down to where this is the cost. If you don't want to pay it, we're okay that you shop around or go somewhere else,
Sure.
because
Yep.
we can't keep losing money on
Right.
this. And I can see even people who, if you've been a long-term customer and you haven't had any claims, does that increase the likelihood that you're going to have claims? I don't know. Again, it shouldn't, because it shouldn't be the life of everything that it's based on, but I don't know. Maybe they see it as that way too.
Yeah, and it's tricky. I mean, percentages say that at some point you're going to have a claim at some time. That's the way that life is. You just don't know when that's going to be, which is why you have the insurance, right? For those days. So if it happened 20 years ago and you're clean from that point forward, great. But if you went 20 years and nothing happened, and you right now, it's a rough time to have one, because we're in a hard market, and companies are really tightening up, and so your price will go up or.
Yeah. All right. So I think one of the interesting things, and this will kind of help us shift into kind of the next piece of this, it's one of these things where we don't want to be foolish and just be looking at the cost for things. We also want to be sure that we have the quality, that when I do have a claim, that it's going to get paid, and that my insurance company is going to be there. They're going to be, solvent and in business still to actually pay that claim and to make me whole. So let's start to talk about kind of what can we do to ensure that we have good coverage, that we have quality insurance. We know we're going to be paying more, like, rates, premiums are going up, but what can I do to make sure that I have good coverage?
Yeah, this is really where the value of an insurance agent comes in, because people just by nature are not experts on insurance, right? They see what they see on television as far as the marketing and that kind of thing, and that's all very entertaining. But as far as what that means for your actual coverage, the majority of people are not fully aware of what they have. And so I have found it to be really helpful to just walk through coverages with people and say, okay, so here's what you have. If this happens, here is how that's going to go. If you have this claim, again, if you look at it and you say you have a 1% wind hail deductible, and you say, well, if you have a claim and you submit it, you're going to have to pay out the first $10,000. Oh, I didn't know that. Like that's helpful for people to know. Or, it looks like you took collision off of your auto policy. If you have an accident and your car is totaled, you're going to have to pay that out of pocket. Oh, okay. So there's ways to just walk through that to make sure you have the proper coverage. A lot of these policies, the coverages are baked in, so you can't really adjust a number of things. One very quick example I see is on a homeowner policy. There's several coverages involved. One of them is called other structures. It's automatically included. It's for like sheds and detached garages and pools and stuff. And a lot of people say, hey, I don't have any of those things. Take it off. And the answer is we can't. So at least you know that you're not really paying anything extra for it. And if we did take it off, it wouldn't cost you anything or save you anything. But it's just helpful to do that. So I think really what you want to do is you want to talk to your agent and say, hey, I want to make sure that I'm in good shape here. I want to know if I have a claim, how much am I going to pay out? Is this covered? And I get, claim scenarios all the time. If my neighbor does this, or if this happens, or my kid takes the car, that's what we're here for. And while I'll give the caveat that we're not adjusters, so we can't definitively say, absolutely, that's covered every time, don't worry about it. We can certainly, based on what the policy says, we can kind of give you an idea of what might happen if you do have a claim. So I think, in this situation, I'd emphasize just talking to your agent, go through the policy. That's what they're there for. They know what they're talking about. They have a license in it. They can give you good advice on that.
Yeah, no, that's helpful. And I guess just people who maybe aren't working closely with an agent or haven't, or maybe they're buying just from kind of a large company themselves, from someone who's out of state. every person, when they renew, I guess this is a question for you. Does insurance renew every year? So auto, home insurance, like these property insurances, do those renew every year? And when they do, typically you get mailed something that reviews, here's the coverages you have in place and here's what you're paying for them. Is that something that everyone should be getting every year as those update, right?
Well, they may not get a review per se. They certainly will get a renewal every year. And I know sometimes the auto insurance renews every 6 months. So that'll be every 6 months that happens. But yeah, you'll get a renewal every year. Generally speaking, there won't be any grandiose changes to the policy, except maybe that wind hail. That might be the one thing. But typically, you won't see big changes. And if there are any changes legally, the companies have to send out a notice ahead of time saying, hey, we're altering the terms of your policy in this way, X, Y, and Z. And I've gotten a lot of those calls too of like, hey, I got this letter. It looks really formal. What's happening? And say, oh, here's what they're changing. 9 times out of 10, it's not anything significant. But I don't think it's wrong. Every year, maybe not so much, but every couple of years to touch base with your agent and say, hey, look, here's what I have. Does this seem right? I will say that going back to homeowners insurance, the dwelling amount every year goes up a certain percentage. They call it inflation guard, which is ironic because they can't keep up with inflation. But it goes up every couple of years. But as that number goes up, that percentage keeps increasing. So exponentially, the dwelling amount on your house goes up pretty quickly. And so after a couple of years, to be like, hey, the replacement cost of my house is X. Does that seem right? And then you can sort of evaluate that. So I'd say every couple of years, it might be helpful to check in and just say, hey, is everything looking okay? But you're not going to get something from the insurance company typically that says, here's what you have, here's what's changing. It's not a normal thing that they do. So you want to take the initiative to check on that.
Yeah, that's helpful. And I was thinking of kind of, you get mailed this packet and the information's in there. So like you're getting it, but you're not necessarily getting told by someone like you.
Right.
Or maybe even comes via email. But basically like everybody that is covered has the information somewhere. It's, given to you.
Right.
But whether you have someone kind of reaching out to you to proactively say, hey, here's what we're seeing, here's what you have, that might be the different experience that people are having.
Yeah. And I will say this, what we've been doing is we set up our agency management system. And as people's renewals come through, if it surpasses a certain threshold and we're like, oh boy, we'll let people know that. What we don't want to have happen is people open up their mail and be like, what the heck is happening? You know what I mean? And so, if the increase is like really dramatic, we'll reach out and say, hey, look, just so you know, if you've gotten your renewal, if you haven't got your renewal, here's what's happening. Here's what we're thinking. Here are options, and kind of do it from that way. But again, that's an unusual situation industry wide, just because of the world we're in right now, where you're seeing 50, 60, 70% increases. I've never seen that in my life. So that's the one area that maybe we are going to reach out proactively and say, hey, this is something you need to be aware of.
Okay. On that, the one piece that you touched on, kind of the value of homes, like the insurance for that going up, because presumably the value of the home is going up. Is that something that if someone said, wait, it doesn't cost this, like this isn't going to be the replacement cost or this, is that something that can be challenged and insurance companies will actually adjust that downward? Or is it just kind of, is it a case by case scenario?
Yeah. And I'm glad you used the word value, Michelle, because I'm hearing that a lot. So what you have on your policy with your homeowner policy is the dwelling amount. That's the replacement cost. The value, the market value of it is what everyone sort of attributes that to and says, man, the dwelling amount on my house is $800,000. I would sell that tomorrow, right? The replacement cost and the market value are completely separate from each other. The market value is what it is, and it changes as time goes on. The replacement cost, which is what is on the policy, is what the insurance company deems if there is a claim, your house burns to the ground, how much would it cost to replace it exactly as is? And that's where they factored in, inflation and materials and labor and all those different kinds of things. So we've seen those been going up fairly significantly for the last couple of years, along with rate increases and all of that. To your question, can you challenge it? Yeah, you can. We have a software program that we can basically plug in numbers and say, okay, well, here's your square footage and here's finished basement and 3 bathrooms and carpet and tile, etc. Here's the number that spits out. I had one recently where I said, look, it was a house that was in the neighborhood I used to live in. And I'm looking at that. I'm like, I'm pretty sure that's extremely high. So I ran a report for this one, and I went back to the company. I'm like, here's where it's at. Here's what your system says it should be. Can we change it? And they did say yes. Sometimes they won't. I can't say it's a definitive. Absolutely, they will. Again, they're trying to get their arms around inflation, and so they may say no, or they might split the difference, or something like that. But that is one area that you can do. And again, I would talk to your agent, because we have that software. If you go on Zillow and say, my market value is this, again, it's apples and oranges. So that's not going to get you anywhere. So I would say, hey, do you think this dwelling amount is adequate? And we can look at it. And sometimes, I hate to say it, sometimes it actually should be higher. And then we'll say, let's just keep it kind of where it's at for right now. But yeah, that is something you can push back on. Absolutely.
Okay. No, that's helpful. And that's where, sometimes we'll see it, but I didn't know, if it actually makes a difference. So, okay. No, that's great. Okay. Yep. So let's talk now about, okay, higher prices. I'm paying more for my premiums. What can we do to try and lower those premiums? We have talked about, deductibles. That's kind of like a common one, but let's kind of, have you seen any creative ways that people are getting kind of around high coverage, things like that?
Yeah. The first thing you can do is shop your insurance. I will say that we see that a fair amount of people say, hey, can you find something better for me? So that is an option. However, I will say that this year especially, that option has not been kind of the silver bullet to save costs. I did a little bit of digging on this, and no surprise that the amount of people that are shopping is up fairly dramatically, just because everyone's getting these 30-40% increases, and so they're looking at other places. What I did find interesting, though, is that the amount of people that are actually switching is closer to like 40%. So it's less than half. So logic would tell you, well, if my price is going up 40%, more people are shopping, that number should be 60, 70, 80, 90%, because people are going to find something somewhere. And the answer is no, it's not. And I will say anecdotally, within our office, when we shop, it's definitely less than 40% that are actually moving. So you can do it, and you may find savings somewhere, but that's not going to be a guarantee by any stretch of the imagination, which I'm sorry to say. I will say one thing, though, that there's a value there with, and I'm obviously biased, as an independent agent, the independent agent side versus the captive agent side, which are all the people that you see on TV, the State Farms, the Allstates, et cetera, where they only have one company. They can't really shop it for you. The price is the price, where an independent agent has 6, 7, 8 carriers that they can look at, and maybe one will be better. Again, I've not seen a lot of that, but there might be one that might be better, and you only need one, and then you can move it. So people can certainly do that. The big one that we're pushing really hard is increasing deductibles. Just increase deductible, and that's really where we're seeing any savings, and that's something that you can do with your current policy. If you have a $500 deductible, go to $1,000. If you have $1,000, go to $2,500. If you have $2,500, go to $5,000. Again, you're sticking your neck out a little bit more as far as an exposure goes of what you may have to pay out, but that is a guaranteed way to save money. And again, I will say it may not be thousands of dollars that you're saving, but it might be a few hundred. And if you don't have a claim, that's a few $100s in your pocket, right? So that's the big one that I would say that you should be looking at. So your home deductible, I would say on the auto side, collision deductible, that's a controllable one that you can increase as well. There's a comprehensive deductible, but typically those prices are not terribly high, so increasing it doesn't save you a whole lot. Liability, that's the price is the price. But yeah, collision deductibles and homeowner deductibles are the two big things that I would say are really the ways you can save money. Creative things that people are doing. One thing with the insurance industry, it's been around for a long time. It's pretty thorough, not a lot of loopholes there, right? There's not a lot of places that people can go, and the insurance company's like, man, I didn't see that. Well, good luck. You did a good job. You got us on that one. So, I've seen people, one I've seen a fair amount of is as kids get older and they graduate college and they get their own cars, they might move out and then they keep the car on mom and dad's policy. don't do that because especially the way the auto insurance works is it is for someone who is a household resident, and the car is titled in the name of a household resident. And if you've moved out of mom and dad's house, you're not a household resident. And if the car's in your name, the insurance policy is in mom and dad's name, right? And so if you have a claim, I don't think that there's coverage. So is it cheaper? Probably, because mom and dad have been around for a while. They have multiple cars, they have a home, etc. But you're going to basically end up not having coverage in that situation. So I'm trying to think of other situations that people do. Yeah, people, again, they drop coverage. They'll drop collision from their auto policy. But again, if you do that, which you certainly can do, if you have an accident, you're going to pay repairs, or if it's totaled, you're going to pay the car, to replace the car out of pocket. So I guess if you're going to do it, I would talk to an agent first just to see what the ramifications are going to be. But as far as creative ways that aren't going to potentially bite them, I don't know that I've seen any.
I was just thinking even parents not letting their kids drive that early. Have you seen a decrease in, new drivers, even like that? Or is that no, they want them to be driving. So no, we're just going to have to pay the cost.
I've seen a mixed bag, certainly more of a mixed bag than I used to. But yeah, probably the biggest impact that other than a claim, of course, the biggest impact that you will have on your auto policy in your life is adding a young driver. It's significant, and there's really no way around it. So yeah, I've seen people saying, I think we're going to drive Tommy around a little bit more to soccer practice. He doesn't need his license yet. Yeah, that I definitely have seen. But eventually, it's really nice to have your child be able to drive themselves. Or I've seen, can you quote this vehicle out for us? How much would it be to add this vehicle? We show them what the price is going to be to add a vehicle that Tommy's going to drive. And they're like, maybe Tommy's not going to drive that. We'll just keep, so they may not add an extra vehicle. So we've seen some of that trying to hold off. Because again, yeah, it's going to be a couple grand probably to add your child. Especially if you add another car with that. So I've definitely seen people kind of holding back on that, definitely.
Okay. No, that's interesting. Let's talk about some even kind of what I should not do. We've kind of, touched on a couple, what people shouldn't do, or common mistakes that you see, just anything that you're kind of seeing now, or just in general, just as reminders.
Yeah. I mean, I think the big thing that we're seeing is either removing coverage, or I've seen some people just stop coverage completely. That I definitely would not recommend for obvious reasons as far as a claim. However, the other part of that is if at some point, a lot of times it's with auto, right? They say, hey, I'm not driving all that much, going to the grocery store and church, and that's it. I'm just going to let the policy lapse and sort of roll the dice because I'm not really on the road very much. One, obviously, if you have a claim, then you're in trouble. But two, if at some point you decide that you do want to get coverage again, now you have a gap in coverage. And companies don't like gaps in coverage at all. And so if you were with company A for a long time and you cancel it and you have a gap in coverage, there's a really good chance that company A is not going to write you again. And be like, oh, I was with you 10 years. Well, you weren't with us for the last 6 months. And so you then have to go to a non-standard company and you're going to pay more anyway. So you see a little bit of that. But I'm trying to think. Yeah, the other ones, like I said, I mentioned as far as removing coverage deductibles and holding off on kids driving, things like that. Those are the main things that we're seeing. There might be other things out there that I'm just not aware of. They don't want to share that stuff with me. But those are the main things I'm seeing.
Okay. Yeah, I kind of had a question, and I think this might fall in maybe not common mistakes, but just something people don't think of. I was curious, how careful companies look. So for example, let's say you file a claim. So it could be for your roof, claim is filed because we just had a storm come through, but the insurance company comes out and says, well, your roof was really pretty old already. So it's more that it's old than you had the storm. And for the example of trees that are dead, you have dead trees and it fell on something. Well, that should have been taken care of. And so there was negligence. Are you, do companies get picky like that? Does it depend what it is? What do you see kind of regarding that type of thing?
Yeah, I don't see a lot of things post claim where there's a claim and they said, hey, you should have done this. what we're seeing more of is companies inspecting properties. If I write a property or a homeowner policy with somebody, generally within 30 days, the carrier is going to go out and take a look at it. They didn't used to do that, at least not with the same frequency. They would, but yeah, they go out and they say, okay, well, we wrote this policy, and you can certainly see how these trees are hanging over this roof, or this roof is really old. You need to address that in the next 60 days. And if you don't, then we're going to get off the policy. So we're seeing more and more of that. We're seeing some they're utilizing technology, satellite imagery, things like that, and saying, oh boy, it looks like we can't even see your roof because of all the trees, or your roof looks, patchy or whatever. And so they'll say, hey, look, because of that, we're either A, not going to write it, or B, you need to address it within 60 days or we're going to get off of it. So, again, post-claim, unless it's something really blatant or fraudulent, then obviously they'll address that. But a lot of times they're going out doing inspections, they're taking a look at things, they're being more diligent and seeing what exactly are we insuring here. And if it's something we're not comfortable with, we're going to get off of it.
Okay. All right. No, that's helpful. Another good question, I think, for people just to, hear is what life changes that, people experience should prompt people to look at, changes in their coverage. So things that happen.
Yeah. The big one, again, I mentioned is youthful drivers. And what I would say on that is, and what I've told a lot of people is, there's two main coverages that are impacted with youthful drivers. The first one is liability because they hit stuff and damage other things. And the other one is collision because they hit stuff and damage your own car. The liability side, you really can't change. I've had people they want to lower their liability limit, which is very dangerous. And honestly, doesn't really change the price that much. Collision, you can have some control over that. And a lot of times what I would say is, a lot of people have a $500 deductible for their collision. That's pretty standard. I would go to $1,000. I go to $1,500. I think I'm a youthful driver. I think we're at $1,500 or $2,000 for collision coverage. That you can look at. The other thing would be, again, if you have a child who's driving an older vehicle, you can take collision off. If the thing's worth $5,000 and you have $5,000 in the bank, you can take collision off and roll the dice. I just had that conversation with a client recently, and they're like, well, if I have a claim and it gets totaled, it's not terrible. We got him an old junky car for a reason, right? And so that's another thing that you can do, and I would say you could adjust that. That's probably the big one. The other one I saw, and this is probably not a lot of people, but I just had this, so I thought I'd mention it. It's more on the other end of the spectrum, people that maybe are retired or close to retirement that have like a couple of homes and a couple of vehicles. I have one client who has a second vehicle and they leave it up at their lake house up in Wisconsin, but they're only there 6 months out of the year. And they said, well, can we take coverage off? It's just sitting in the garage. And the answer is actually, yeah, you can. We call it winterizing it, layup. There's different names for it, but basically just keep comprehensive coverage on it, which is, $100, $200 a year. So if it gets stolen or vandalized or the house burns down and it's damaged, you have coverage from that, but everything else is taken off until you then go back up there and use it. So, and that can save you I think this person saved, $800 or something like that. So it's significant. So that's another life change. I don't know if that's the word I would use, but a circumstance which lends itself to a place that you could possibly save money. That's another one that I did see that we can do, and it does save you money.
Yeah. Okay. I guess another way to ask the same question is maybe, in addition to like life events, what are even like property changes? So I think maybe people, do like renovations or they make changes to outside, inside of their house. Are there things like that should, maybe they add a swing set or things like that? Is there something that should make them think about their insurance?
I would say, and if it's a major renovation, I would say that might be a situation where you want to go talk to the agent and go back to what we talked about, that third party that calculates the replacement cost. Your house may have been rated on a average or builder's grade kitchen, and all of a sudden you've got a slick new kitchen, and now it's a custom kitchen. That'll change the replacement cost. So you want to make sure to maybe run a new report, which they don't take very long to do. So it's not a huge ask, I don't think. run that, or hey, we added another bathroom, or we finished our basement, or things like that. Those are all things that absolutely I would check to see if that impacts your dwelling amount. It may impact your market value, but again, it doesn't really matter, from our standpoint. But it may also impact our replacement costs. But things like, hey, I painted a wall. Okay, that's fine. Or I got new carpet. Well, it was already carpet. Things like that. That doesn't really move the needle. But if it's a significant addition, or a renovation of a kitchen, or an adding of a bathroom, something like that, those are the things that we'd want to know about, because we want to make sure you're properly insured.
Yeah, it's funny because I feel like when you make changes like that, you're excited to make them because, it's making your day-to-day life better. But usually people don't want people to know that for property taxes or for insurance.
Right.
You're like, well, I don't want them to know. Right. But if something happens, so in this case, if something happens, you absolutely want them to know so that it's going to be covered, because you want you want to be made whole to what you were at. Yep. So just a reminder of, it doesn't really help you to hide anything if you really want something insured, so that if something happens to it.
And initially it sounds good, and it may be like, oh, well, I'm getting this coverage for free or whatever. But then when you have a claim and they don't pay, they say, well, we rated you on Formica countertops and you have quartz, and that, you'll be upset about that, right? So you want to kind of take the long view in those types of situations.
Okay. No, that's helpful. Okay. One situation I kind of heard of recently, we're just going to kind of touch on a little bit, like in the claims process, I guess. I think one people kind of probably see or hear someone describe is, it may be after a storm, but even anymore, it could just be in, normal. We haven't had bad weather. People walking up and down your street, looking at roofs and coming to you and saying, hey, your roof could be replaced. We could put that under, we could file a claim and get that paid for you, rather than you having to pay for it. One recent example that I heard was, this was, someone kind of going up and down the street and actually said, to the homeowner, I'm going to file this claim for you. And, got them to sign like the claim form. So then they submitted that. But then, this person's thinking, is this a scam or not? And the insurance agent in this case actually went back to the homeowner, and just kind of questioned the claim, because it was sent to them, I think, to file, and, kind of questioned it. And this, is an elderly homeowner, and just kind of described, well, this was the situation. This person just walked up and told me. The insurance agent came out and said, wait, I don't see any damage. Are you experiencing damage like inside the home? Neither of which were happening. So they said, well, I'm going to cancel out this claim. So thankfully that was a good result. But I guess, is that normal or not? And I guess just a reminder of people to be careful what you sign. And then also kind of what scams are you seeing, things like this?
Yeah. Your question about, is it normal? Certainly the part of walking up and down the street has become very normal. Last summer, in my neighborhood, we had 3 different people walking up and down the street at the same time. And I think what's important to remember with those people that knock on your door and say, hey, we think you have hail damage, those people are salespeople. They are not roofers. And so, but yeah, what they're trying to pitch sounds appealing. They say, hey, we think you have hail damage. We're helping Susie down the street right now. And they have a hail claim or whatever. We're insurance experts. And some trucks even will say that. We're insurance experts, right? We're insurance experts. We'll take care of everything for you. You don't have to do anything. We'll handle the insurance, sign on the dotted line, and we'll take it from there. And that sounds very appealing. And sort of reference my lottery mentality of like, oh man, this is great. I'm going to get a free roof. My roof's 25 years old. It's I don't want to pay $25,000 for this. And if this person who seems very nice and genuine is going to do it and take care of everything, why would I not do that? So we're seeing a lot of that. And my answer to that is I would not give these people the time of day. And I haven't. When they come to my house, my family is like, oh man, Dad's going to talk to these people. Here we go.
They meet the insurance agent.
So those have been some fun conversations that we've had at my front door. But anyway, no, if you have if there's a hailstorm, which we've had a lot of those, and I referenced that the frequency and severity, they're definitely out there. I can't say that they're not. I would probably try and hire or have someone, a trusted person that a roofer who you know and trust, and just say, hey, can you take a look at this and just see? because there's a couple of different alternatives that could come about from that. One, you actually have hail damage. The integrity of your shingle is compromised. Water can potentially get in, and maybe already is getting in, and you need to have it replaced. That is alternative one. Alternative two is you don't have any hail damage. The hail hits, no impact, and everything is fine. Just because you see the little things falling doesn't all of a sudden mean, well, now I got to replace my roof. It doesn't mean that. The third thing is that you may have like pits in your shingles, or some of the like gravel may have come off or whatever, but the integrity of the shingle is still there and it's still doing the job that it was intended to do. So it may not look like it's a brand new, roof, but again, the insurance company is not there to make your house look nice. It's to replace something if there is a claim. So if it doesn't look awesome, that's not a claim. So, I would say, as you said, Michelle, I would definitely not sign anything. You're basically signing a power of attorney over to them to take care of everything. If you suspect something, maybe call somebody proactively, but don't sign anything with these people, because there's a decent chance that it could be denied. Again, if they're trying to eyeball hail damage from the street from their truck, and an adjuster jumps up on the roof and says no damage, then the other people are going to say, well, we've had 20 of these and we're experts, and why is your insurance company so different than everybody else? So then it's going to make your agent and make your insurance company look like the bad guy, even though you don't actually have any hail damage. So yeah, I as those people knock on your door, I would just politely tell them to have a nice day, but I would not entertain anything they say.
Yeah, no, that's helpful. Any other scams, I guess, besides kind of the roofs that we've seen? Any other things that you feel like have been common?
Not really. No, I haven't. I'm trying to think about anything that I've seen off the top of my head. There's always people out there trying to make a dollar somehow here and there, but nothing jumps out at me. The people knocking at the door, those are the big ones that I see a lot of.
Okay. Well, that's really good though. Yeah. So I guess we kind of said we would end this like on a good note too. One of the things we did want to talk about, or kind of ask you about, is kind of what is the future of, like, when you kind of think about where do I think premium prices, rates will be going, just kind of in your experience or what you've seen, right. Do insurance companies, they have these couple big years and great, now we're going to see them decreasing our rates next year because we've had a couple of hard years. What do you kind of see going forward, kind of the future of, rates or insurance as best as, you think about it?
Yeah. And if people are still listening after all the doom and gloom, I'll have some positive news right. to end for. So as I said before, the rates that you're paying now are based on the claims that have happened over the last couple of years. The percentage, or whatever you want to call it within the industry, that sort of helps guide this is something called a combined ratio or loss ratio or something like that. And basically, it's a ratio of how much money is coming in premium versus how much is going out. In 2022, the combined ratio is about 112, which means for every dollar that went in, $1.12 was being paid out in claims. Okay, so obviously the insurance companies were not profitable in 2022. 2023, that number was 105. So it was a little better, but still not profitable, which is why, again, you're seeing these rates, they're trying to get to a point of being profitable again. And so far this year, from what the research that I've done, so far this year, that number is 99, which is still, not amazing. However, it's on the right side of 100. And so I think what that means is that we're finally seeing some rate adequacy in the industry. Companies are kind of at the point where they're profitable again, and so we should start seeing some leveling out. I don't want to say that we're going to see decreases yet, and I will also say that it's going to vary by line item. I think the auto, again, this is just my own speculation, I think the auto really was hit by the supply chain, the labor, materials, the cost of used cars. They got hit pretty hard on that. And so that was a problem for a while. It seems like that's leveled out a little bit. And so I think the auto, hopefully anyway, will start to be a little more stable. The property one's a problem, and I think it might be a problem for a little while. So if you have a wind hail deductible on your home, that might stick around for a while. But there certainly are signs that things are starting to at least level out, and hopefully in the next year or two, we'll see some stability, and I certainly hope we don't see any more craziness as far as these huge increases, 40, 50%. I'd be surprised if that happened again. Can't guarantee it, but I would be surprised by that. But as far as pricing going down, That also may take a little bit of time. I think companies, again, want to be stable. And unfortunately, companies are not going to be like, policyholder, it's been a rough couple of years for you. So just as out of the kindness of our heart, we're going to drop your rate by 10%. I don't foresee that happening. I see more of a situation where it's like, well, policyholder, your price is going to be 2% increase or 1% or flat, which would be great. That I would love to see that. It's been a while. I don't think until we start to see some competition in the industry where you see some companies starting to lose clients because they're going someplace else for price, that they then have to lower their pricing. Until we start seeing that, I don't know that we'll see a dramatic decrease in pricing. Could it happen and will it happen? I think it will. Again, the insurance industry is very cyclical. When it happens, hard to say. It could be a couple of years, maybe until we start seeing that. But I think it's coming, but I don't know exactly when.
Yeah. I think it's helpful even to hear, though, kind of the pieces that do or would drive prices down. And I think with most things, it is a competition. It is, this company over here is doing this and that, you don't want to lose customers either. So they're a business, like you said, they want to make a profit. And so there is that fine balance. So until we see that, then, we as customers might benefit from that. So that makes sense. I think it's helpful to
I think
understand.
Too, insurance companies, they're always looking at what other people are doing, what other companies are doing. And I think back, when COVID hit, one of the carriers, and I don't remember which one it was, said, "Hey, no one's driving. We're going to give you some money back on your premium." All of a sudden, everybody did it, right? And so they say, "Hey, well, that's a competitive advantage that they have. We want to be in that same boat." So all of a sudden, every company was like, "Hey, we're going to give you some money back because you're not driving." Similar principle. Once we start seeing companies being like, "Oh, wait, you're taking a rate reduction, or you're, getting all this money or these policies over to you, and we're starting to lose our book a little bit. Well, we need to make up for that, so we're going to lower pricing." So yeah, we'll see that at some point, I think, but just not sure when.
Yeah. No, that's interesting. I think it's really helpful. Thank you for sharing just kind of all of the full cycle. I think it's helpful. We start giving them hope and then we realize, okay, but this is a reality of where we are today, but then hope that, insurance is cyclical. So knowing that eventually we should get back to kind of something that's more normal. So yeah. Anything else, I guess, that you would have to share, even just as reminders to people just normally, or kind of leave us with? Or?
Yeah, I think a couple of things, and just sort of reiterating what I already said. One, the insurance industry is cyclical. So just because your rate went up 30% this year doesn't mean it's going to go up 30% every single year indefinitely. I think it'll stabilize. And so you just need to hang on, which again, to emphasize the point, increase your deductibles. That's going to be your best way at this point to help save money. And I would say too, if you have a claim that you're sort of on the fence of submitting or not submitting, now is a good time to probably try and maybe take care of that yourself. Because again, if you have two claims, you very well could be non-renewed, and then you're really in trouble. So really, I would just sort of hang on, increase your deductible, kind of wait this thing out. I think it will change at some point. But yeah, again, I think shopping is an option if you want to look at that. And again, I'm going to toot the horn of independent agents, because obviously that's what I am. There's some value there. But we're in this with you. We would love to have everyone have a flat renewal or a decrease that make our job a lot easier, a lot less upset phone calls, right? But it's just not the world we live in right now. So we'll ride this out, and it'll change at some point.
Yeah. I'm really glad that you did describe the difference of an independent agent versus that captive agent, because it does matter. And it is nice to have the choice when you know that your agent can look around for you, so they know when your prices are going to be increasing, your premiums are, then they can say, here, and I know that you even asked the question, hey, is your roof new or is it older? And okay, maybe we should or shouldn't switch based on that. And so I think that is really helpful. And it's nice to just have that ability to look around. Otherwise, it is what it is. And so I'm really glad that you explained that for people who, might not have that and might want that ability or just to see. So like you said, it might even be a good time just to kind of shop around and see what's out there. You may not switch, but you might. So I think it's a good point just for people, as we're all trying to lower our costs of everything, that might be one if you haven't looked at it in a long time. So
yeah, absolutely. Yeah, especially if you haven't looked in a long time. If you had the same agent for 20 years, it was your your parents' agent, that kind of a thing. If you haven't touched it in 20 years, that one I definitely would look at, because it could be the increases over the years would stack up. And those are the ones we probably have seen the most that we've saved money for people.
Okay. Yeah, no, that's great. Well, thank you again. This is always so helpful, Ryan. It's like we get the kids into school and then we say, okay, wait, let's see. Let's go back and see how the year's been, what's changed, and what should we be aware of. So,
no, that's great. Thanks for having me, Michelle. This is great.
You're welcome. All right. Thank you for joining us, Ryan, and thank you for taking the time to listen to this episode. If you enjoyed it, follow us on LinkedIn or on Facebook to stay up to date with our current conversations. You can find additional resources for this episode in our show notes or at our website, financialdesignstudio.com, and we'll talk to you next time.
Thanks for listening. To find any links or resources related to this episode, check out our show notes. Your host was Michelle Smallenberger, a certified financial planner and CEO. The guests featured are from Financial Design Studio, a team of experienced fiduciary, fee-only advisors based in Chicago. Anna Lewis is the executive producer of the Behind the Designs podcast. And as always, for more information about Financial Design Studio and who we are, check out our website, financialdesignstudio.com. And final note, no content discussed on this podcast should be taken as financial advice. Financial Design Studio accepts no responsibility for your individual choices. We'll see you in the next episode.